0.7. It's about 1% in total. Is this live now? Right. Okay. I've got your Think Capital YouTube channel open. So I go, oh, my screen's there. This I've got my screen open. It's looking right, is it? But I'm moving the screen now. Nothing's happening. Oh, is it? Oh, right. I better switch that off then because it's going to put me off. Sorry? Uh, on the screen. We got two in. Oh, right. Okay. So if I'm talking now, can they hear me? I have to put in the chat now. Can you guys hear me? Type of one in the chat if you can hear me. 30 seconds. Right. Okay. Right. Okay. So we start now. Yeah. So what's with the delay? Why is it delayed 30 seconds? Yeah. My screen's just gone off. Yeah, my screen share's gone. Screen. Let's back down. Yeah, sure. I just hear someone else then. Who's that? I'm going to delete this before people start thinking they're going long. It looks like it's going to keep going short. Ah, right. That's what I could hear you meeting in the background. Yeah, it's not happening. I told you 2 o'clock, didn't I? I said wait for 2 o'clock. Yeah. It may come back down to the daily. The daily levels on gold are just that's where you want to trade from if you can. Let's type in the chat now. We start at 2:05. Where's that gone? Look, see, look at this. Look at this wick now. There's a high chance that will close. That will go bullish now from here. That's the 2 p.m. The thing is, the stop loss is getting bigger and bigger and bigger, which is that's what's happening on gold, isn't it? It took out everyone who didn't wait for the New York Stock Exchange. Do you know this is potentially a bitch candle? Yeah, we might get a supreme bitch candle from here now. Look at it, just the way it's pulling back so quick. Look, my thing's gone off again. I think so. On the YouTube, it's gone off. All right, hang on. Right, right. All right, I was lagging behind there a little bit. Here's the bitch candle. It's too big for me. I wouldn't be taking this. Yeah, maybe. No. Yeah, it's taken me years to get my head around gold. And once you understand the way it moves and the way that the wicks form, it's just like you can't take your eyes off it, and you just build this consistency up, and you get better and better as it goes. So we've got quite a lot of people in here. We got 14. There's a lot of people in the chat. ZFX, how you doing, mate? I've seen you a few times on my Twitter recently. Nice, nice. What? What today? gold is gold is scary. Right, so I got 30-minute delay there, right? 30 seconds. That's not so bad. Right, okay. All right, guys. Welcome to the live session. This time on YouTube, which we were supposed to do last week, but we had a couple of glitches. So, but we're here. We're on live and we're on YouTube. So, I passed 200Ks last week. I think a few of you might have noticed. So what I was going to do today was I was going to go through the two trades that I took in phase two that got me past. Then I was going to go through um, maybe I'll go through some fair value gaps, and maybe I'll go through some 5-minute bitch candles, because the bitch candles are the ones that's like the first trigger that you see in order to get into any of my trades from a fair value gaps. Now, if you've been coming to these sessions on Discord, a lot of you will already know what the bitch candle is, how it works. So yeah, let's get to work. So the first trade I took was in it was on Wednesday, CPI day, and I had a live session with my one-to-one student, Jeremy. He's been with me for a month. He's actually got an incredible strike rate just by following the process that I've been teaching him. And we actually went through gold, and I said to him, "What's going to probably happen is the CPI data is going to come in, and it's going to tap down into this area, react off the daily, and then it's probably gonna move bullish. But obviously, as you all know, it's not a great idea to trade with news. So what we did in the academy was we waited for the setup to form its second move to the upside. Basically, once the volume had calmed down and all the unnecessary spikes, which usually get initiated by the news, once they're all out the way, you can actually find very clean, very clear setups that you can trade and take some nice profits. So obviously we had the 130 candle here, which was the CPI data, right? Pushed price all the way down, filled this fair value gap, bounced off the daily level, and then obviously it took this fair value gap clean out, right? Now, obviously, you get all sorts of people trying to ping an order off here, ping an order off here, maybe ping an order off this first fair value gap, and they get swiped. Everybody gets their orders closed. You probably get a lot of slippage in these areas as well. If you're patient and if you wait at least 30 minutes, maybe 45 minutes, maybe a little bit longer, you can actually get in on the second phase of these moves, right? So once for this one, because this turned out to be a 3-hour trade for me. I was actually holding the trade just above to 209.51, which is just about there, but it missed me by a couple of pips, right? So the method that I use, which I'll go through just after, is I actually trail my stop loss into profit as we move up. I'm not the type of person that would take out partials. I like to leave my trade run. If it's running, it's running. If it's closed, it's closed. I'm not one of these people who takes partials. It's just not in my nature. I don't want to be checking my phone all throughout the evening, go to bed, still checking my phone, wake up in the morning, checking my phone. It's not me. So I'm either in or I'm out. And the way I maximize my profits is by trading my stop loss. When I get to 1 hour, I'm at break even. When I get to 2 hour, I'm trading at 1 hour. When I get to 3 hour, I'm trading at 2. And when I get past 3 hour, I'm trading at 3. And if it comes back and it hits 3 hour, well, that's a damn good trade by anybody's strategy. So the first thing I noticed, right, was, we've obviously got this. Let me just move this a little bit closer to me. Right, we've obviously got this area here, right? So we've created this fair value gap at 2 p.m., right? That's just around about when New York Stock Exchange opened, 2 p.m. to 2:30. And you see this next candle, 2:15. This is the one that created the fair value gap. So although what I'll always say to people is, and my students, the first fair value gap of each session for me is the most important, because I see a fair value gap as a retracement on a confirmation candle. So if you were to confirm a trade here that is going to go bullish, okay, this candle's come out, it's broken structure, broken structure, broken structure. It's like you've always been told when you first start trading, you wait for the candle to close, and by the time it's closed, it can be such a big candle that you're so far away from your stop loss that you don't get appropriate risk to reward. So it gives you a position on the chart where you can actually wait for a retracement. And there's a lot of eyes on fair value gaps. It's a big thing. Obviously, smart money concepts and ICT, it's used in all sorts of different strategies. And basically, the way I use it is I will filter in high volume periods of trading. I will filter all the way down to the 5-minute time frame. So what you notice here is we've actually got a couple of bitch candles right here. Okay, so we've got the first move down, and what you'll notice is that this candle here at 3 p.m. actually closed with no lower wick. And if you study price action, you study candlestick anatomy, and you study what generally will happen after a candle closes with no lower wick when it's moving bearish, generally, and I say 8 or 9 times out of 10, the next candle, not the specific candle, but the next candle or two will generally flip around and turn, because it's almost signifying that um, it's run out of area to move into. All right. So once we came down into this area, I'm not the type of person, again, just to go and enter the trade just because we're at the fair value gap, because you don't know how much further it could push down. It could push through the fair value gap and then start to bounce. It could also, it could reject. It could keep going through. So the bitch candle, which you see here on a 5-minute time frame, we've got the first bitch candle here, right, which is a candle that closes bullish after it swept the previous candle. This one here, we've then got like a drop in volume. We've then got this next candle here, which is another drop in volume. So my thought process here was that if we start to break these highs, there's a very high chance that price is going to go straight into profit. So what I do is I actually set a stop order for price as it's moving in my favor. It will generally tag me in and move into profit. And if I've got it right, it doesn't even come back into drawdown. So that's what I did here. Okay, we had a very slow and quite annoying accumulation just above my entry. Basically, I was at I think I'd moved my stop loss into profit at this point. I think it was around about 0.5, because it was CPI day. I wasn't interested in getting taken out of break even. I thought it was CPI day. If I come out of this trade with 0.5, that's a win for me. So what I basically did, I just moved my stop loss into profit. It would have closed out, had it come back against me, it would have closed out for about 0.5. Ultimately, that trade kept running, and you can see the way it just missed my order here. Right, it missed my take profit by a couple of pips, and it started to pull back. So this trade then came back and stopped me out at 3%, which was just around about here. And that was that took me from initial balance. Basically, that took me to 3% on the day. Now, the second day, which was yesterday, when I passed the challenges, I actually had a couple of trades here, and I got caught out, right? Because I got caught out by this move here, because there's a fair value gap here to the left hand side, which is it was a 15-minute and 1 hour fair value gap, I think. There was a few of us in the trade. I got in too early. I think I got a bit excited because I was planning on passing the challenges that day. It went, and I took the trade right at this point here. Next candle came in a drawdown, came down, took me out. So I didn't panic. I actually, so I took a 1% loss at that point, which is not very nice. But if you give yourself a little bit of time, maybe move away from the charts, come back, refocus, and again, look at what's actually in front of you. Your trade idea sometimes can still be valid. It just means that sometimes you got a little bit impatient, you got in too early. And although I seen this as a bitch candle, it's not as clean and clear cut as this one. So this one appeared at 8:40. However, we're moving on into the closure of the 15-minute candle. So I wanted to wait for that. Next candle opened and pushed down again. And then we had this secondary bitch candle here, which is the one I got in on. So we were holding this. We were trying to take it to, again, about 2 or 3 hour. Didn't quite materialize, and it just kept bouncing off this level here. Came back down, and it took me out 1 hour. So my 1 hour loss that had occurred in the morning was covered, and I was back up at just over 3% on the day. What I then did was I then traded the DAX, because the DAX lately has been just blowing off to the upside and just not coming back down. It's been extremely volatile, and I was flicking through the charts whilst I was waiting for my gold to hit take profit, and I actually identified that there was an area here that for me was probably a better setup than it was on gold, right? Because as we come down into this area, we sweep the Asia lows. Okay, this 15-minute candle here, right, 9 a.m. That is a very clean and clear bitch candle, right? So those of you who've been here and been in Discord and been watching the way that I analyze the candles, the way that I analyze the reversals, as long as it's at a POI, like a fair value gap, a daily level, Asia low. If you line up these confluences, add them all up, and then combine that into your entry strategy, what you're doing is you're building logic behind the trade. So if you look at this here, right, I didn't take this trade. I wish I had, but it didn't happen for me. I was already in gold. You see that he's come down into the fair value gap, right? And then what you've got, you kind of ignore this candle because this is basically this is a candle here that closes bearish. If we zoom in a bit, this this 15-minute candle here closes bearish, right? So I'm still not expecting for price to fully turn around yet. What we need is for the candle to actually close bearish, bullish, all right? And once we've got that bullish close, we're then looking for the V-shaped formation. All right. So we've got the V-shaped formation here, which I've spoken about in Discord many, many times. We've got the low, we've got the lower low, and we've got the higher low. So I'll run through how I would have entered this, although I didn't enter it, and then I'll run through the trade that I actually took. So on the basis of this candle here being the bitch candle, all right, what we then do is we wait for this candle here, the 15-minute, to come down, wait for it to form the wick. And as long as it forms a wick that's higher than this one, as the candle flips, turns bullish, and then passes the wick to the left, that's then creating a new higher high. So we've got a low, we've got a lower low, we've got a higher low, we've got a higher high here. So we're actually breaking the wick here. We're actually forming, and we're taking it's quite an aggressive entry on a 15-minute time frame. But the way that indices are moving and the way that DAX moves in the London session, you've got enough volume for this to work. It's certainly not something that I would use in lower volume periods of the day, but then again, I wouldn't actually be trading in lower volume periods of the day anyway. I've got very strict windows where I can enter a trade, and it basically runs from 8 a.m. to half 11, and then from 1 p.m. straight through till about 4 o'clock, depending on how I feel and whether or not I've got a trade or not. So this trade here, if you look at it, this would have taken my, if I hadn't taken gold, I mean, ultimately that's a 7-hour trade just off reading this candle here and understanding the process and how the candles work, the advanced candlestick anatomy that I teach in majority of my videos. That's an exact process here, which, for me, it's my A plus setup, right? The trade I did take was, yo, how do we turn it up? That should be, is this still, is it still live? So can you hear me now? So guys, just paused a minute because I think we might have some mic issues. The sound is silent. Is that better? Two times louder. Is that so? That's better now, right? Right. Okay. 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 Right. So we went through the last trade. Obviously, that was one that I didn't take. Over that was an absolute belt of a trade. Would have hit 7R. Um, Obviously, people would have probably got a little bit fearful of this move down, because if you look at it on a 15-minute time frame, it slammed down so quick. It obviously sometimes doesn't give you enough time to think. However, the trade I did take after I'd taken the loss and then the 1 hour trade on gold was this one here. And there's a slight difference to the way I thought about this trade, right? Because number one, we've got confluences. So I'm always lining up as many confluences as I can, right? The way I line up my confluences is obviously that we've got the Frankfurt session here, right? So we've got the high of the Frankfurt session. We've come down, we've broken through it. So I'm looking for a retest on that level. It's kind of like a liquidity grab, right? We got a 15-minute fair value gap, which is also here. Okay. However, we didn't get like a clean bitch candle that I like to see, but I did see this candle close here with no wick to the downside, and that's actually a 15-minute candle as well. Now, anyone that knows me and anyone who's traded with me for any period of time will know that once the candle closes, if the candle's moving down, when it closes with no lower wick, there's a very high possibility that the next candle moves bullish. It moves in the opposite direction. So that's the same for, if price is moving bullish. When a candle closes in a direction it's facing with no wick, it generally means that it's kind of running out of steam, or it's running out of places to move into. And basically you'll have the next candle, or the next couple of candles after it will actually change direction, right? So we didn't have an authentic GFX bitch candle, but we did have this green candle facing upwards here, right? So I waited patiently, and what I wanted to see was, I wanted to see price pushing away higher and outside of this fair value gap. So I used the same process again. Now, I entered on this candle here, and as you can see, once I've placed my stop order, the candle goes straight into profit, takes me with it, and it doesn't come back to my entry. It doesn't come back. It doesn't come back in the drawdown. So as soon as this candle is formed, I can now move my stop loss um, into profit or into break even, and I can just let the trade do its thing. And in all fairness, I think it took about 45 minutes, an hour, and this was the second trade that basically took me to the promised land of passing 2 challenges in the same day. So yeah, some very good setups there, and very simple, very easy to understand, because I know a lot of people use fair value gaps. There's different methods of how you place them, how you use them. But for me, if you've got a fair value gap that's created during the session, or if you have one that is, the most recent. So basically, if you're looking at um, taking this trade from here to here, if you can add as many confluences as you want to it. So if we take the trade from the high to the low, ooh, we're actually coming back. It's not a very deep pullback, but it's coming back to the 38 level. Okay, you've got the high of the Frankfurt. Okay, so you've got Frankfurt high, you've got the structural high, you've got the retracement, the pullback, you've got the fair value gap, and ultimately that is quite a high probability setup, as long as you're following the candlestick anatomy. Because again, you can see these candles start to close with no bottom wick. Next candle isn't a bullish facing candle, but if the candle is forming the V shape, it's slightly different on indices to it is on gold. I've noticed that there seems to be a lot less wicks, but you've got the reversal pattern here, okay? And then that next trade, so it's 45 minutes to a full take profit, which was 2.67R. Right. So those are the 2 trades I took. I don't suppose we got a 30-second lag here. So has anyone got any questions that they want me to answer for a minute? What fib set am I using? Yeah, I know. I can see it on the screen. I'm looking at myself 30 seconds ago. I can't hear myself. I pressed the volume off button because you'd be hearing me, and then the volume would come through in the microphone. Yeah, let's go right. Let's go to look at that. There's the bitch candle. I'll hold fire with the questions a minute, but you can see this bitch candle. Look how look. I mean, because of the volume that's in gold and New York Stock Exchange at the minute, this candle is the bitch candle. Look, right, because this is the New York session, right? The last 15 minutes. New York Stock Exchange opens, slams down, takes all of these early buyers out because people are buying here, right? People start buying. They're starting to see a 5 minute reversal. Okay, they're starting to see this pattern. New York Stock Exchange opens, slam down, bam, bam, one, two, three. What have we got? We've got exactly the same process. Whether this keeps going or not is irrelevant, right? Because if it doesn't keep going, the entry that I teach, it goes straight into profit. So you can get your trade to break even or even just plus zero point 0.1, plus zero point 0.2 very, very quickly. The entry system designed that you're not trying to catch the trade or catch the falling knife. You're trying to catch the reversal with the momentum. So you've got the V shape here. And of course, it's Huppers 2, right? So it's very high volume at the minute. In the market, especially with gold. We've not long had news. Maybe an hour ago we had news as well. But we've got the reversal pattern. One, two, three. We've got the reversals. Okay. Now that interprets into a 15-minute bitch candle. So although this wick is really high, what I would have done in this instance to try and get myself a bit of a better stop loss is instead of waiting for the candle to pass the wick up here, I'd enter on the closure of this candle, right? So you can tell just by reading the 5 minute time frame that this is the first signal, right? The first it's pretty instant rejection, right? On a 5 minute time frame, you've then actually got the reversal wicks right here. So you got one, you got a low, you got a lower low, higher low, bam, straight into profit. And if you look and you monitor this candle here, right? It doesn't actually, it's not coming back, it's not coming back to the entry, it's into profit, and pretty much it's the way to go. So as soon as this candle is formed and moves bullish, that's when I would go to break even, just to make sure that I'm securing my trade, just in case I've got it wrong, and just in case it's going to go against me. So you'll be looking at a 2 hour trade. Now you'll be looking at a 2 hour trade. It's not even, it's not that far in terms of 5 minute candles. It's just up here. So we plotted this. I think I'd sent a YouTube video out recently this morning, plotting this level, and it's reacted to it. Now, you think about trading, it doesn't have to react, it doesn't have to stay. Um, it doesn't, you don't have to hold this trade all day. You need to get in and get out. Maybe with a 50 pip stop loss is ideal. This, because of the volume, has ended up about 60 pip stop loss, but you think about where it's potentially going to go, it's more than likely going to go up to the session high, maybe even up to all-time highs again, right? So if you can read that on the correct time frame, I mean, you're at break even now regardless, right? Because this 15-minute candle has formed its wick to the low. You put your stop loss below this wick here. Whether or not you'd hold it to all-time highs, personally, I think it's going to go through, but you never know. You've got 2R here, and 2R, especially on a Friday afternoon, is that's an incredible trade, and it should hit within a couple of minutes. I'm still on delay, aren't I? I'm just going to read through some of the chat room, see if we've got any questions. Right, Zeda understands the V shape. Right, so the V shape, let's draw some little pictures up here. Right, the V shape that I go through, right, is very simple, right? We basically got, let's do this one in red. And I will go through this time and time and time again, because it's the way I see the market, right? The idea of it is that we've got, this is the reversal pattern. right? So the V shape on the wicks will look, bear with me. So I know we go through this quite a lot, but ultimately the aim is to get everyone up to speed with it, to understand and be able to read it in situ, because it's once you understand the process, it's it changes the way that you see everything, including gold, because gold is so volatile. People pay too much attention the to the candle bodies, and they don't pay enough attention to the wicks. So the V-shaped reversal pattern would look. Let me just get these a bit darker. So the V-shaped reversal, right, is where you see the wicks coming down and then you see the wicks going up. That generally, to me, is the first indication that price is going to flip. We went through it last week, right? That this candle ideally needs to be a bullish facing candle, right? Because if we've got again, if we've got 900 people, for example, if we've got 900 people trading in this candle, right, and it's not closing in this upper one third, which is the high of the candle, that means, if it closes bearish, or there's still majority of people in this candle that are bearish. So it needs to close bullish. And ideally, it would close bullish with a small little wick like that, which would then create a pin bar, right? Now, the entry that people would teach you in the textbooks is that you wait for this candle to close. My entry system doesn't require that, because I'm reading the candle wicks, right? So we've got a lower low, higher low, right? And if you're following the wicks down, when you follow them up, once we pass the wick here, we're now creating a higher high in terms of candlestick anatomy. So if you can put your entry here, which is just above this level, okay, you then get to put your stop loss just below. And again, on average for gold, about 50 pips is a nice size stop loss, because it will easily do 100 pips, which will give you 2 to 1. The more aggressive entry would be when it passes the actual candle body. Okay, you've got to have a lot of volume for that. But then you're aiming for a 2 to 1, and it works on a 5 minute time frame, 15-minute time frame. But my absolute preference for any time frame is the 30-minute, because there's a lot more. Obviously, there's a lot more time in the candle. There's a lot more participants in the candle. It's a little bit more clearer in terms of um, the whole price action as a whole is clearer, and it gives better trades. Although you might have a slightly bigger stop loss, you just aim a little bit higher, because ultimately, once gold has made its mind up of which direction it's going, the majority get involved, and it can go straight to take profit very quickly. We've traded this system in our Discord. We've had trades that have hit a full 2 hour take profit in about 4 minutes. So it's all about reading the wicks. Now, if this candle does close bearish, okay, what I would wait for then is I would wait for an additional candle. So whether we get another candle, maybe it close strong bullish like that, we then wait for the next candle. And the most important part of the entry, right, is that we don't just take the trade as soon as this candle opens, right? We wait for the wick to be formed to the downside, right? So we want this candle to open, we want it to come down, right? We want it to come down first. We want it to go against you, and then what we want it to do is we want it to come back up. We want it to leave a new higher high, okay, or higher low, sorry. So we need these wicks to start making higher highs as we go, right? So as this comes down, if it breaks this wick here, you do not take the trade, right? It doesn't happen. You do not take that trade. If it doesn't break the low, then as this candle flips bullish, you take the trade, and generally speaking, the volume kicks in as it passes the wick. The volume kicks in, and it can just take it so far away from your stop loss and your entry instantly that you don't get much drawdown trading this way, and it works on everything. It works on GBP USD, it works on GBP JPY, it works on Euro USD, it works on pretty much everything. As long as you're at the POI, so you've got maybe a daily level manipulation point, maybe you've got an order block, maybe you've got a breaker, maybe you've got an accumulation retest, maybe you've got a fair value gap. It doesn't matter as long as you've got a POI there. You don't just do it mid range. It's got to be at a significant level where you're expecting a volume to kick in. So um, that's the basics and the candlestick anatomy that I teach people. And once people get to grips with it, you see an instant change in the results. As I was saying, we've got Jeremy in the group now. He's just been with me for the last month, and his win rate was, I think, 7 wins, 2 break evens, and 1 loss out of the last 10 trades, just from spending a month with me day to day, working with me every day, working on the process. So, okay. So we can delete that. All right, I'm going to take some questions now whilst we wait and see if gold hits this take profit. What time frame are you watching most of the wicks, Greg? So the most important wicks that I will follow will be the 30-minute. Absolutely, that is, for me, that's the strongest time frame to trade gold on. It's low enough to get decent entries, and it's not too high that you're waiting around all day waiting for your 1 hour 1 hour setup. So 30-minute for me. If the volume is really high, in London, New York crossover and New York Stock Exchange, I would go down to the 15-minute. But yeah, that for me, the 15-minute is a bit of the cutoff, especially now there's a lot of volatility in the market right now. The 5-minute or anything lower than that for me is a little bit too low. What I do is I try to identify whether there is a 5-minute entry, and then I will monitor that, but I won't enter on the 5-minute. I will continue to trade the 30 or the 15-minute time frame. Okay, what's the next question? Free confluences. My entry checklist. Okay, my entry checklist actually has 7 different confirmations. All right, and each of my students get a report card, which has an entry checklist on it. So what they're basically going to do is, if they're entering the trade, they can check off the boxes, and as you check off the boxes, obviously that then becomes a star graded trade entry checklist. So if you check, I don't think it's possible to check all 7 because some of them are a little bit similar. Excuse me. But if you've got a 5-star trade entry, you've checked five different entry confirmations, you just enter the trade. You don't even think about it, just enter the trade. If you've got 3, maybe you can just be a little bit more patient until you do get the 4th or the 5th. And if you've got 2, then it's probably not very likely that the trade's going to go into your favor. So if you want to take it, you've got to lower your risk or whatever. Okay. How long do I normally hold a trade? Right, I hold a trade anything from 4 minutes to, I think I've held trades all day. I've even held trades overnight this year. So I'd prefer to get out. So if the trade's not going in my favor, I'll just trail it at 1 hour and just leave it go. But yeah, there's no defined answer to that. It's for me, I'm holding it until I think it's going to reverse, or I need to close it, or it hits my trailing stop. Okay, what's next? Thank you for the explanation. No problem. The GFX concept. Yes, 7 confluences. Seven. So it's not so much confluences. They're entry criteria. If you've got entry criteria that are, catalysts for you to enter the trade, I think it's important to have them written down so that you know what you're doing when it comes to entering a trade. You're not just saying to yourself, fair value gap, green candle. You need a checklist. So if it's a candle flip entry, if it's a bitch candle, if it's a confirmation candle that closes in its one third upper or lower, depending on direction. If you get in the wicks in a line, if you get in V-shaped wicks, there's a lot of things that you need to add into your entry checklist. And then the ones that work are the ones that you back test, and the ones that you've got data on that prove that when you enter this way, you can go into profit and you can hit the take profit. I shared the checklist last week. Yes, the checklist is. I shared it last week, so I think some people in Think Capital Discord have actually got that screenshot. I don't have it. I've got my own version of it, but yeah, I can post it somewhere, I suppose. Or maybe someone can post it in the Think Capital chat room. Hello, friends. Welcome. Bish Candle. Yeah. I have a whiteboard next to my desk with checklist. Right. That's great. Yeah. And just check them off. It gives you confidence to enter the trade. You don't want to just enter the trade willy nilly. You know, there's a fair value gap. I'm getting in. Doesn't mean anything. It's just a fair value gap. Until that fair value gap holds, it means nothing. And until that 1 hour level holds, until that daily level holds, it means nothing. So entering with, limit orders for me are, in my opinion, it's a form of gambling, because you're expecting it to hold when you don't know if it's going to hold or not. It could just smash straight through it, especially with gold. Well, this here, this area, if you've got a 50 pip stop loss and you've gone in the mid range, well, it's actually come below the fair value gap before it started to turn around. So you don't want to just, waste your money, waste your accounts. This trade here that I've identified from earlier, if you look at the entry, we've gone into profit, and this is all done live. It's gone into profit. It's pulled back. Okay, maybe it would have tapped you out. I don't know. It depends on where you get tapped in, but it looks like it's going to go take profit to me. So that being said, it's not 100% given, is it? So data is stored in my head. Get it written down, creator Emir. Get it written down. You need it written down. I one of the things that really sets traders apart is a written trading plan. If you've written it down, it it it's you can't change and alter what the plan is. The plan is the plan if it's written down. If it's in your head, you can add things and take things away from it quite quickly and quite easily. So I'd write it down. Absolutely. We are related, Greg. We have the same surname. Oh, right. Lewis as well. What a cracking name. 21 watching, only 11 likes. Come on, guys, hit the like button. Yeah, this is the first one on YouTube. Normally, there's over 50 people in Discord, so I don't know where everyone is. Maybe people didn't get the memo. I'm not sure. Can someone please post again? Not sure I missed it. I think this has been recorded, so it'll be on the Think Capital YouTube channel soon. Today, tomorrow, next week. 3 candle fair value gap work better than any other. What do you mean by 3 candle fair value gap? Ah, right. Yeah, it is basically a fair value gap. You can't have a fair value gap without 3 candles. Um, Share the checklist on Think Capital. Yeah, someone's done that. The checklist is yeah, it's taken years to get those confirmations written down. Some of them work, some of them don't. When is your trade? Watch only gold for 3 years. It's all experience. It's in my head. Okay. Well, good luck. Sorry. You want me to? You want me to carry on? No, I'm doing questions at the minute because I didn't have an awful lot to go through today. What I haven't already been through last week. So yeah, doing questions. I thought I'd start the questions a bit earlier. Is that all right? Well, no, I'm going through the questions, but I think they talk so fast. And I think, what I've actually spoken about today didn't take as long as I thought it was going to. um, no, I'm not seeing the same people as what we had on Discord either. Different group of people. All right. What is trading edge and how do we find your edge? Trading edge is, I suppose, it's where you see the market and how you have to backtest certain strategies. Um, if you find a way that works for you, like for me, it's reading the candlestick anatomy and basically applying what 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 I see in terms of I read the wicks. Okay, so I don't pay as much attention to the candle bodies as what probably most other people do. I read the wicks because the wicks are for me the first indication that a trade is either going to reverse or not. Okay, so the higher the time frame, the better. 30-minute definitely is probably the most um, on gold. If you can trade on the 30-minute time frame, it will give you some excellent entries. Like for example, I've marked off these here, right? So this was another trade from yesterday. So what you would see is you can on the 30-minute time frame, you don't necessarily need to have a bitch candle, right? You can see that prices come down to the daily level here, all right? We'd have a stop loss here, which this actually gives you a 32, 33 pip stop loss, all right? What you can identify here is when it comes down to the fair value gap, right? Number one is that we've got this candle here, right? So this is quite a big long wick to the upside, but the candle's closed bullish, right? So you notice that this wick is higher than the last, and what you've then got is these are not quite reversal wicks, right? So the wicks now that are moving up in a line. Okay, so you've got the high or the low, should I say? Sorry, you've got the low, then you've got the higher low or high, then you've got the higher low. Okay, when you enter, you wait for this candle to flip down. Now, if it doesn't break this wick, obviously it's not going to break this wick, but if it doesn't break this wick, when this candle flips, you can basically get your trade to hit your 2 hour target in pretty much one candle, right? So that is probably, let's drop down the time frame a little bit. That is one 15-minute candle to take profit. And it's all done by reading the wicks here, okay? So we've got the low, we've got the higher low, and we've got the higher low again. So I would wait for this candle, as I've been saying many times in all the videos that I've done with Think Capital. Wait for the candle to open, wait for it to come down. Okay, once it's come down and it's failed to break this wick here, as the candle then flips and goes bullish, it can go straight to take profit in a matter of minutes as long as the volume's there and you're in the right area. This is one of my A plus setups here. Another one here didn't quite get going, but again it went straight into profit. And yeah, it did end up coming back down in the next session, but there was news here, and that's basically what sent the trade back to 1 hour profit. So um same people with different usernames. How do I handle losses? Sometimes I tilt, okay. Sometimes I don't quite take the loss like I should, but the most important thing I think is I would walk away for at least 10, 15 minutes. Just get out, get away from the get away from the screen, and then I tend to move up the time frame. If I've maybe entered too low, like I did here, I entered too low. I moved up the time frame, and then you can see that there's more structure to the trade. So this is the same trade as I took yesterday on the 5 minute time frame, but you can see the wick, you can see the low, then you can see the higher low, then the trade goes into profit, and didn't quite hit my take profit because my take profit was up here, but Again, it came back to 1 hour and closed out. So handling losses is very difficult, especially if you know that you're more than likely right anyway. It's about having the patience maybe and moving up the time frame to be able to adjust yourself. And the higher time frame, so the 30-minute gives you a lot more strength behind the trade normally for me. So lower time frame confluences are good, but higher time frame for entry, as in 30-minute, will give you better entry than the 5-minute will. I love GFX platform. Prop firm, that's nothing to do with me. GFX prop firm's nothing to do with me. That's a new. That's a, that's a completely new one to me. They've actually got my logo. I realized that last week. They've used my logo, which I've been using for about 4 or 5 years. Tilt happens to me in poker and in trading. How do you tilt in poker? It's an interesting one. I don't know. Yeah, yeah. I can imagine. Just go all in every time. How do I manage multiple prop accounts? Well, I don't use a trade copier. I'll do two at a time. Any more than that, and it's difficult. I don't have a Think Capital account, which is allowed to be used on a trade copier anyway. I don't have that account. So basically, I like C Trader. I trade on C Trader, so I got FTMO on C Trader, which I'll use on desktop, and then I'll use Think Capital on my phone on MT5, and I just trade them both at the same time. My entry system allows me to. I don't have to press a button to enter. I set the stop order. I'm not interested in taking the trade unless the trade is moving in my direction. If it's moving away from me, I'm not in the trade after the if you push buy or sell and you maybe a little bit early, the trade can go against you and hit your stop loss. But I set a stop order so that it will be a couple of pips normally above where I want to enter, and I'll let the trade do the work. So I set a stop order. I don't use limit orders, and I don't use market order either. DK from Discord, loving Friday streams. D Slag. I love the YouTube name. Yeah. So you guys prefer YouTube or do you like the Discord setup? Are you using TradeZeller? Is it good? Yes, TradeZeller is really good. What do you like more, MT5 or C Trader? I love C Trader. For me, it's what I started with. I had MT4 when I first started, and then the guy who was teaching me showed me C Trader, and for me, I'm just used to it the way it works. I suppose I got a review video on my YouTube how it works, quite advanced. So I've also done a new video on my YouTube today. It's how I passed the 100K challenge on Think Capital and also FTMO at the same time. It's about 30 minutes long. It goes in depth. It explains phase one, phase two. It's quite transparent. It shows my trades where I went on tilt and went a little bit deeper than I would have liked into drawdown and how I got myself out of it. And then phase two was smooth. Um, Again, you got to focus on the challenge. It's not very nice when the trades start going against you consecutively, but it's how you manage. It's how you manage it thereafter. So prefer Discord, but we're okay. I don't mind. It's the same process for me. I've got my screen, I've got my microphone, and I got my charts. YouTube preferred, or maybe we do both. All right. Does anybody have any questions on the candlestick anatomy, the entry method, fair value gaps? I don't have an account with Think Capital yet. I got a competition on my Twitter feed. You maybe want to go and have a look at that. Can't wait to see my name in the payout section. Let's take a look at what this trade's doing then, because nobody seems to have any more questions. Yeah. It seems to have gone into a mess. It's Friday afternoon. Friday afternoon is not the best. It's not the best day to trade. Um, yeah, I've got. It says there's 19 watching now. Started streaming 60 minutes ago. It's lower numbers than what we normally get. Normally, normally I can't keep up with the questions. Where are we? Right. My YouTube name is GFX Trading. That's quite simple. um, I find order blocks more useful than fair value gaps. It's each to their own, right? If you use order blocks, use order blocks. If you use daily levels, use daily levels. If you use monthly levels, use monthly levels. If you use the Asian low, okay, use the Asian low. If you use the Asian high, if you use whatever you prefer to use, you can use the same entry system at each and every single point. The entry system is completely different to the POI. So your point of interest, the way you see the market, you could maybe trade an accumulation breakout and a retest. I've got a video where it explains how to trade the fake out of an accumulation, which is where it will break out and break back in. It's basically where the bitch candle came from, because on one time frame it looks like it's breaking out, on a higher time frame it looks like it's rejecting. So fake outs basically is you've got to have a process. So if you're for example, let's show you here, right? If you've got an accumulation, let's change the color of this. Right. So if you've got an accumulation, right, and you're going to take a breakout, the first thing you want to do is you want to wait for the candle to break out. Um, and it's the same process on the breakout as it is with the candlestick anatomy and following the wicks. So I would trade a breakout on no lower than a 30-minute time frame. Okay. So what I'd look for is I'd look for the breakout. I don't know what's going on my screen here. It will not click. There we go. Right, got it. So wait for the breakout. Okay. Then what you want to do is you want to wait for the next candle, ideally to close full body outside of the accumulation. So this is the accumulation here. All right. Prices just bounced around for a couple of hours, maybe Asian session. And then we wait for the candle to close to the outside, right? If it closes to the upside like this, you actually wait for this candle to fully close. Okay. Now you also want to be following the wicks of the candles. So even if this candle on the 30-minute time frame came all the way down here, looks like it's breaking back in, but then it closes to the upside. If it closes bullish or if it closes bearish, it doesn't really make too much difference at this point. What you need to do is, again, you wait for the next candle, right? So the next candle potentially would be a bullish candle. And you want to wait for these wicks, okay? So you want these wicks to start following each other in line, right? If it's making a higher high, higher high, higher high, when it breaks this wick here, it's now becoming a very high probability trade that it's going to continue through. So you got the accumulation, you got the breakout, you got the full body closure on the outside of the accumulation. Then you've got the next candle. Wait for it to come down first. It will generally, a candle will open, move the opposite direction, form the wick, then it will move up. As I've always said in these sessions that we're having on Fridays, you always wait for the candle to go the opposite direction to what it's uh, what what it's going to end up in, right? Form the lower wick. It doesn't matter how deep it comes back. If this wick is a little bit higher, all you want it to do is you want it to respect the previous wick, all right? Then as it passes the wick to the upside, if this is a bearish facing candle, wait for the wick to go. However, if this is a bullish facing candle, okay, there is a difference because it's a bullish facing candle. The anatomy is slightly different. If it's the bullish facing candle, you can get in a bit quicker when it passes the close. And then generally speaking, it should follow through. And sometimes it can go to TP pretty quick. I would personally recommend, if you're trading a breakout, you want to be aiming for a 1-to-1, because ultimately a breakout is going to come back down and it's going to retest the accumulation at some point. So once you get one R, either close the trade or wait, trail at 1R minimum. When it's a breakout trade, it will break out and it come back down, retest. The retest entry, so you could even take the 1R on the breakout. Then on the retest, you just wait for the same thing. You wait for the candlestick anatomy, wait for the trade to show you that its retest is done, complete, and then you wait for so to move away from the accumulation. And in that instance, I would probably aim for 1-to-3. So you could get the 1R, wait patiently, and then take the retest on the accumulation and get another 3R, or just take another 1 or another 2 or whatever you can get from it, because there's no given to, any strategy is going to provide you this R every single time. Depends on the amount of volume, how many people, how big the wicks are, how big is your stop loss? Is your stop loss 25 pips, which means you could probably get 50 pips 2R pretty quickly, or is your stop loss 50 pips and it's going to be 100 pips before you could get to 2R? So accumulation breakouts are a very good way of trading. Actually, I traded them many times over the years. I passed many challenges using breakout trades. It's just keep hitting the 1R over and over again. Okay. How do I notice fake outs? Right, been through that. Have you taken any short trades lately on gold? I do not like to short gold at the minute. I've got no interest in shorting gold at the minute. All I use is knowledge of market structure, price action, liquidity concepts. Yeah, simple. Just keep it simple. Pips and wicks, the title of the next live session. Maybe, yeah. I got some ideas for the next live session that I was going to do in this session. So this session is basically being formed on the back of passing those 200K accounts. What I was going to go through was slightly different. It's going to be the 5-minute bitch candle and the formation of fair value gaps, but kind of had a bit of a mixed bag today. Never confirmed an entry for the body candle to close engulfing. Yeah. Appreciate the fake out fair value gaps explanation. Yeah. I mean, there's still a chance that this could actually reject and close back in. You've got to read the wicks, and the way I do it is if this candle here did that and this wick's higher, well, what have you got now? You've got reversal wicks in the opposite direction. So if it's a fake out, okay, and this candle here doesn't break the wick to the upside, well, if it's breaking this wick here, then it's going to reverse. So you could potentially, depending on your strategy and the way you see the market, you could wait now for this candle to come up, respect this wick and respect this wick, and then take a short trade, which maybe will go through the bottom of the accumulation, because it may be a liquidity grab on the upside of the accumulation before it reverses. So in a bullish market, bullish accumulation, I'd look for a fake out at the bottom and then to go long, and the reverse in a bearish market. So guys, just stick to your strategy and you should be good. Yes, agreed, Fabi. Always stick to what works for you. Yes, exactly. Right. How are we doing on time? Are we doing a duck race, or what are we doing? I don't know where Andre's gone. Right, have we got more questions? Stay consistent. Easier said than done. Duck racing Discord. Everybody loves the duck races. Yeah, I think it's the delay. There's a delay. It's yeah, the delay is a little bit of a. It's a little bit tricky because I'm asking the questions are there, and there's a delay, and then I don't even know if it's still there. So, hmm. So we do. I don't mind where you. I don't mind where you want to do it. Yeah. That I had originally got a different plan for today, but the passing of those two accounts kind of I changed my mind last minute. I thought I'd go through those trades, and yeah, a little bit on fair value gaps and whatever. And then what I'd had planned was I was going to go through the 5 minute bitch candle, and I've got about 40 screenshots of different trades and different variations of it. So maybe I'll go through that next week. That was what I was going to do this week, but like I said, we'll go through the 5 minute bitch candle because that's an extreme entry, and if you get it right and you learn it, it's it's very profitable strategy. But it's all the same kind of thing. Each and every single trade has the same confluences. It's just if you can refine it down to 5 minutes, those trades you're in and out in 4, 5, 10, 15 minutes sometimes. Just you got to be super focused. So I'm with you. Bish candle, write it down. Yes. Right. So how do we do the duck race on YouTube? Yeah. Yeah, it might work because they might think I'm talking to myself. What is the duck race? You're about to find out. So basically, everybody in here gets a duck, and the winning duck gets a free challenge account. I need to open Discord. Right. Have you got the link for the website, please? That's Canva. All right, here we go. Copy text. Right, close that down. Change window, share window, screen, tab, that grace, share. See if that's gone over. Let's see. How long is the delay now? Right. We've got the duck race open. There's hell of a lag my end. I don't know how long it is on yours, but copy. No, it yeah, it's freezing and then it's coming back. Right, so set. Oh no. Where's the settings now? Here? All right. They're big names. All right. Do you want me to delete them or no? I don't know. I don't know. There's 25 names in the list, right? I don't know if I don't know if they're right, are they? So have I set these ducks up right now? All right. Shit. Here we go. I've got real proper delay on my end. Yeah. Yeah. Was that loud your end then? All right, so we got a first winner, Emme Carnesme. Who came second? Congrats, Emme. Right, you're the winner of the first one. Right, we're going to do again. We do this 3 times, Andre. Oh, we got the second race running now, right? We got three accounts to give away. I think that's the norm. So we've got a bit of an issue. I don't know how did I end up in there. All right, guys, that one, that race is null and void. Right, we're gonna do that again. We're gonna do that again. We're gonna do that again. Can I edit the names? Yeah, I don't think I can win again. Right, we're doing a rerun. 40 seconds in. It's hard for me because I'm seeing two different screens at the same time. Get rid of that. I couldn't hear you, no. Yeah, I can believe that. I never win anything as well. I never win anything. I don't win again. That's not even real. Come on. How is that even possible? How is that even possible? I don't know. I don't even know. I don't even know. Right, do it again. Right, we're doing it again. We're going to end up duck racing all night now. I don't know. I haven't done anything. Just put the names in. Yeah, my wins don't count. Right, we got Akashav 1. Okay, so that's the second account. We're going to do a third account now. Have we got the screenshot? Right, last one then. Oh my god, I can't believe I just won twice in a row. That's typical. The only time you put my name in there and I win it twice. If I win again, if I win again, I'm never coming back. I'm never doing the duck race again. I, I tell you what, my dad used to work in a fair when he was a kid, and he used to have hook a duck. Maybe it's got something to do with that. It's duck luck. It better not win again. Some, my, no, I'm not winning. You got. There we go. Ashton, it's still running 7 seconds behind. 4, 3, 2, 1. There we go. Yeah. Well, this is it. You were, yeah, I get it. These ducks won't shut up. All right, guys. Thank you for coming. I enjoyed. We're doing the same again next week. And next week I'll be going through the bitch candle. Yeah, I got new YouTube video out that you might go watch. It's about 30 minutes long. How I how I passed 200k challenges in 14 days. So you can head over to my YouTube channel. Just type in GFX Trading, and it should come up. Screenshot of my name, and yeah, enjoy. Don't forget to subscribe, and we see you all next week. So happy trading, guys. Have a good weekend. Yeah. Okay, mate. Right. Happy days. All right. Okay. Huh? Have a good weekend, mate. Bye bye.